Good evening, everyone, and thanks for joining us. Modest gains in stocks today, but that's not what people on Wall Street were buzzing about. Much of the talk was about two members of the Dow Jones Industrial Average, both household names, both pillars of the U.S. and global economies, and both involved in massive multi-billion dollars that could transform their business models and industries. But only one of those companies appears to have a deal. The other, no deal. And that's where we start tonight. After months of negotiations and multiple sweetened offers, Pfizer received a firm no from Britain's AstraZeneca, which said Pfizer's latest and supposedly final offer of $119 billion to create the world's biggest pharmaceutical company still wasn't enough. So no deal. But some pretty big questions remain about what's next for Pfizer and AstraZeneca.
Take it or leave it, and AstraZeneca left it, rejecting Pfizer's sweetened and, it says, final offer to buy the British drug maker because the $119 billion price tag just wasn't enough.
We decided to tell Pfizer that at 53.50 they needed to put more than 10% plus on the table to get into recommendation discussions. So that was on the request from our shareholders, that's what we did.
But the brush-off is leaving Pfizer with an uncertain future. As its plan to create the world's biggest drug company hits a major roadblock. Despite the setback, Pfizer has one more week to make another offer for AstraZeneca, a deadline established under British law. Pfizer says it won't, but it does give AstraZeneca shareholders time to turn up the heat on the board and pressure it to continue talks. Pfizer also has the option to go hostile, which means taking the issue directly to shareholders over the head of the board, but it says it doesn't want to. The chance of the deal completely collapsing is real, and if that does happen, Pfizer will be left with a ton of cash to put to work.
If they didn't necessarily want to repatriate the cash, they could also raise debt and buy back shares and use the cash overseas to balance off some of that debt.
And the outcome of this deal could leave a lasting effect on other American drug companies looking to do overseas deals that would lower their tax rates.
Closing the loopholes on being able to do the tax inversion for these mergers would likely mean that there will be a bit of a flurry of trying to get these deals done sooner rather than later.
Without a deal, both companies may find themselves searching for big fixes because each has seen sales drop, and as patents expire, they're facing more and more competition from generic drug makers.
And here's a look at how both drug makers performed today. Pfizer shares rose 0.5%, but AstraZeneca down 12%.